Okay, great. Okay, so this is really just going over what John was. I actually agree with John's longer-term count because we both share Elliott wave theory. But this is a slightly longer chart, and we can see it dates back to 1985 here. We can see there's a solid bull run coming up here, very solid indeed, actually. And then we peak at 7,000, and we've got a clear A, B, C, D, and we're looking at D finishing around 6,500 at some point this year. So we're actually getting to a very pivotal point here, and if the analysis is true to form, then we will be set up for quite a major decline over the next couple of years. And you know, looking at the charts, this could end around just under 4,000. At which point a new bull market will start, and you know, there could be some fantastic buying opportunities to enter around this key area. But right now we're focusing on wave D here, and it looks like we're at pretty much a crucial juncture at the moment. So that's the very long chart here, dating back quite a few years. I'm now going to bring us up slightly nearer term. Okay, we're looking at wave D here, okay, and I'm going to bring up wave D on the chart. Okay, so this is the final wave D, and I have it as another 5 wave sequence. So we can see we have wave 1, we have wave 2 down, we have 3, 4, and then wave 5 will subdivide into 5 waves. So I was talking about wave 4 back in November. In fact, this chart was from November to my subscribers, and I had a target of around 6,200, but it could extend. It could extend a little bit further, depending on the outcome of the impending decline. So that's the medium-term picture. So we looked at the long term, we've looked at the medium term. We know we're at a pivotal point. Let's look at the let's look at live action on Friday. Okay, so this is pretty much up to date. This is the close last night. Now, subscribers will know that I was looking for a key point here. I was calling a top at 6,090, and I was looking for a decline to around 5,850, and this would take the form of an ABC. So we'll be coming down here. This is the A, this is the B, and I would have the C coming all the way down here to around 5,850, 5,820. So not a massive correction, but you know, it then could extend up to around 6,500. However, for this to come in play, we need to see the right price action. Now, it's all very well having Elliott wave as a guide, but if the price action doesn't tie in, then you know, I'm not going to take the trade. So Friday looked pretty positive for the wave count. We started to fall off here, and so you know, above 6,000, and we fell to the lows were, I think they were around 45 on that day, 5,945. So by selling off yesterday, we filled a closing gap which had been left open at 5,956. At this point in time, I was looking for a weak correction and a close below 6,000. Now remember, 6,000 is a key psychological level. If we'd closed below this, that would have given me a sell signal for Monday morning. However, the price actions have decided to do the opposite, and what's happened is we rallied actually very strong, and we closed just over 6,000. So unfortunately, that negates my sell signal, which I was looking for on Monday, which would have confirmed the ABC count, which I have here, which is the A, B, C. So for me, the next couple of days, next week, are crucial if we're going to make a top at 6090. At this point in time, that's still intact, but the price action is bullish. I can't deny that. The price action is looking very bullish. So we do need a price action sell signal to go hand in hand with us seeing this full ABC correction. And a magnet trade would help as well. There is another case as well. If we do rally next week, I've been talking about a short-term target at 6157. Now this is my bullish scenario on the wave count at the moment. So next week, if we do hold over 6,000, I would imagine we are going to take out 6090, and we're going to go straight to 6157. Now, what is the relevance of 6157? Well, if we take wave 1, that was 641 points. Now, in Elliott wave theory, wave 1 does sometimes equate to the same distance as wave 5. So if we take the bottom of wave 4, which is here, wave 4 was this bit here. Hoping you don't have a price delay, a time delay here. And then wave 5 would obviously go up here, and it ends around 5157. So what I'm trying to say here is that if we hold 6,000 next week and we keep another 2 closes above 6,000, I would say we're going to hit 6157, in which case we will have a deeper correction to around 5,500. If we do fall next week and 6090 holds, then I would anticipate a correction to around 5820. But whatever happens, we're at a crucial juncture, and we're looking for a key peak to come in, and we're looking for a correction. So the correction either comes in immediately and we go down to 5820, or we get the final move up to 6157, in which case we'll have a deeper correction to 5,500. And at the moment, we just have to focus on the price action. Once the price action comes in line with the Elliott wave theory, we have a trade setup. Okay, John?
Okay, Mark, I'll take
over to you. I'll just change.
Mark, hang on a minute. What I would suggest is that if you have any questions about this, please send them through. I have to say the question technique here is not terribly good. It's very difficult to see the question. I can't really expand that part of the control panel. What I suggest is that if you have any questions now, then please ask them now. Because as they come in, I can respond to them.
Sorry, I had my microphone turned off. That was let me start again. I was just saying that if you have any questions on FTSE, then now would be a good time to send them in. The question, I say well, you didn't hear me. The question control panel is difficult, so I can't always see what is going on. I only see one question at a time. It's difficult to keep track of what's right. Robin Collins said it looks like a fourth wave triangle. Could you be specific, Robin? There's no which part of it looks like a fourth wave triangle. Do you mean the whole 5 waves since December 1999, or what? Let's see what else we got here. Yes, we are recording it, Mike. Sorry, we did record the first webinar as well. And if you email me or Mark, we will send you the recording. We're recording this one as well for those of you who possibly have any problem with audio or seeing the screens. We've got a question on the magnet, which is not the right time. Actually, do you want to ask a question on the magnet, Mark, now? Mark?
We can do, yeah. I'm happy answering. Yeah, that's fine.
Okay.
Yeah.
This comes from.
I can't actually see the questions, but
No, I have to read it out. It's on the control panel on the questions, but the question is, why is the magnet target accurate, yet the stop loss a standard 50 points?
okay. Well, first of all, the stop loss. I choose the stop loss because that is how I've tested the system for many, many years, and it's the best stop loss which fits in with the system. So I mean, it could tie in with the average true range of the FTSE, which is the medium of where the FTSE moves daily. But the 50-point stop seems to give the highest hit rate for the magnet. In terms of why the magnet is so effective, that is all in the manual, but it's also a collection of systems which I would need to spend a bit more time discussing on how I choose the magnet.
Okay. Next question is about FTSE. And that's not. Hang on, let me just get the right one. Okay, the triangle, the four-wave triangle, is since the recent top. I guess on FTSE, I mean, it's certainly possible. I mean, there's a problem with triangles. You never quite know for sure how they may develop. You don't really know until you've seen the third wave develop. Sorry, the fourth wave. I mean, it had to be a flat triangle now because we've got very similar lows. Any comments on that, Mark?
No, I mean it's possible we're seeing a flat at the moment.
Yeah, I think a flat
that would certainly it would certainly fit in with this final move up to 6157 that I'm talking about. And you know, there's also the top of the price channel at 6200. So there's lots of factors calling a top either around about now or 100 points time. Either way, there's not a lot left in the FTSE until we see this impending correction.
Okay, next question is, plenty of false signals. How does one filter out the bear bull traps? As the answer is with difficulty. You know, you're never going to filter them out, all of them. I mean, on the big core service, we have managed not to go short yet. Well, I've been tempted once or twice, but we haven't done so. Then the big core service is a longer-term service. We're looking for confirmation. But of course, you know, we still make losses. I don't think there's any way of filtering out. You just have to be happy. You have to be satisfied with your techniques, really. Work with it, get to know it, prove it's right, and you'll still always get losses, and there's no way you can avoid that. But I can't say much more. Really. Any comments, Mark?
Well, I mean, it comes down to systems as well. I mean personally, when I trade the FTSE, I'm combining analysis with systems like the magnet. So if my analysis is pointing upwards, and I have a magnet trade going upwards as well, then you know, that will lend me short. However, if my analysis is pointing upwards, but I've got a counter signal on my system, then you know I'm not going to enter that trade. So it does help having two viewpoints rather than just relying on analysis. The FTSE is very renowned for producing bull and bear traps. I will sort of state that now. So generally, when I'm looking at analysis, I try not to look at what everyone else is looking at. I'm trying to look at a different perspective, not so much on the longer-term analysis, but more on sort of the intraday analysis. That's where you know having a system really does help.
Okay, we've got three questions. Mike Butcher said stop loss is question mark. I don't know what you mean by that, Mike. Please be more specific. Robin Collins said, do you value the 0.618 extension? That's a golden ratio of 1 through 3 as a target. I'm not sure what you mean by 1 through 3. Maybe you want to be more specific about that too. Question for Mark. I can't always take trades during the day due to work commitments, though I do have some flexibility. Would the magnet system still be suitable for me to try to trade?
Well, I mean, lots of my subscribers are, you know, full-time in jobs. But with today's technology, it is quite easy to trade on the go. If you have a mobile, all you need to do is download IG onto your mobile. You can trade off your mobile these days. You can do the same with Gecko. Most of the spread betting companies offer these these applications. So, I mean, if you receive a text message from me saying buy this or sell the FTSE, you know, it can just take a couple of seconds to log on to onto your mobile phone, log into IG, and place a trade. You know, we're putting a stop. So that would be my best advice if you are busy during the day.
Okay, we'll get back to the webinar and get back to the Dow, which you should see on your screens now. Just quickly on the Dow, I mean, I won't go through the pattern. It's actually quite. Actually, no, we will quickly look at the pattern, but I'll look at this bit first because you know, what we're seeing here is an A, B, C, A, B, C, and a little drift down, and now another A, B, C. You know, I mean, there's no evidence that it peaks in here. We could go a little bit lower. We could see another C wave down, but it's looking like we're going to see higher prices. So it's similar counters on FTSE. I want to have a look at the longer-term count because it's very different from FTSE's count, which is quite interesting, I think. So we'll go into the weekly chart. Okay, we're almost there. Sorry, there is this. I guess there's a time lag. Unfortunately, there's nothing I can do about the time lag. It's I have no idea why it's happening, but hopefully it's not disturbing it too much. As you saw on FTSE, we've got a sort of triangular formation, but on the Dow, the peak came in 2007. We had that huge, great rally. I guess the Dow just flooded. Sorry, not the Dow. The Fed just flooded the market, the states with cash. Something they can do actually, because you know the U.S. currency is currently the sort of global currency. So they can flood themselves with the currency, whereas if somebody else tried to do it, they'd still have to pay money back in dollars, and that wouldn't be such a great idea. But of course, the dollar is immune to that problem. They never have to pay back in anything else but dollars. So it's something that other countries can't do, at least not to the same extent, I don't think. I think that accounts for this huge, great rally. We then saw this very impulsive decline, 1, 2, and then a 1, 2, 3, 4, 5, and then final 4 and 5. I mean, that's pretty clear. I mean, everything is debatable, but that looks like a corrective, an impulsive, definitely impulsive form. Okay, we've gone back above the 618% retracement level, although it was actual resistance to start with. Quite a good actual. I mean, that was a very good sell signal on that particular point. The whole of 2010 has been really dithery. I mean, this sort of move here looks corrective. We're now starting up again, 1, 2, 3, 4, and then there's fifth wave. But it's just, you know, this could be impulsive. One of the questions I was asked was, you know, why couldn't we just go higher? Could we not see an ABC on FTSE? And could we not just shoot up? It seems unlikely given the economic situation. But anything's possible with markets. It's a huge mistake to think that something isn't possible. But certainly we have seen 5 waves up. You know, that's the sort of benchmark of the current situation. We have seen these 5 waves up, and we're just looking for a peak. And there's no sign of any acceleration. Okay, if we start to accelerate up, that would of course be different. That would be a buy signal, and we would count this then as a 1, 2, 1, 2, and then a 3, and that would be a very different kettle of fish altogether. But you know, the time of year suggests we're going to see a fall. The wave pattern suggests we're going to see a fall. We just haven't seen anything happen at the moment. So that's a question on the Dow. And I want to have a look at the T-bond. I think the T-bond is quite an important market. Let's have a look. I've got graphics here. Now the T-bond's got traced out quite an interesting pattern as well. Seeing this initial wave down. Then we've got wave 2. We're then seeing a pretty impulsive one. Actually, let's get this right. It's not quite like that. 1, 2, 3, 4, 5, and this counts as a 4. This drift sideways. So just one more pull back there could give us a low. So a similar situation in reverse with the Dow. I mean, often these two markets do act very differently, and with the T-bond we're looking for a low at the moment, just needing one more low to confirm that, and with the equities looking for a high, one more high to confirm that. Now I will cover other markets as you wish me to. I think we'll have a look at gold and a look at pound dollar, but I think that's probably enough. We've got quite a few questions to get through. So let me just stick up I'll stick up gold first. I'll move this out of the way. You probably can't see that, but I'm having some trouble with the cursor at this point. Keeps jumping around. Okay, this is gold from the drawing tool. I mean, the question is again, has gold peaked? I mean, now fundamentally, there's no reason why it should peak because the QE goes on. May have to continue indefinitely. You know, gold could go up and up and up, but that ignores one of the important factors of any market, and that is that news comes in and it affects the price. You know, all this good news that could go forwards could be in the price already. You know, the fact that the fundamentals remain positive is completely irrelevant in that sense. It's rather like the earnings of a company coming out, fantastic earnings, and the share price going down. And the reason is very simply that, you know, all those fantastic earnings was in the price already. So it doesn't have an effect on the market. So, you know, I think we could fall back, but at the moment we've got an A, B, C, an A, B, C, and you know, so this could be an important low. In fact, the rally has not done much to set the world on fire, but the alternative is it could go a little bit lower. I think there's certainly potential for this decline to continue a bit further, but I think it's corrective. I think it will be a buying opportunity. We'll just have a look at the rally just to show you what it's done so far, which is not very much. Okay, so is that all it's done? No, let me just condense that. It's done a bit more than that. Yeah, so it hasn't been. It showed a bit of force, and now it's collapsed again, and it looks like it's going low, to be honest. Although again we've got an ABC, but these things aren't completely definitive. In fact, it could also be a 1, 2, 1, 2, 3, 4, 5. So yeah, but I think it looks like we're going to see lower prices on gold. Okay, so now we'll go through to pound dollar. If I can find the right part of the. I'll also do a pound euro by request. Now pound dollar looks pretty good to me. You know, I've been through the longer term analysis several times on my video clips, and you can all get the video clips if you'd like to see those on a weekly basis. Well, not necessarily weekly, but I certainly do send the occasional one out to my free list. And we've seen this 1, 2, 3, 4, 5. We've then seen an clear ABC declines, which suggests it's corrective. And we've then seen a bit of dithering around, which often happens, and now we're seeing a thrust up. So I think there's a good case that we're going to see the pound go maybe up to 170, maybe even 180 in fact. And clearly we've got a breakthrough resistance here, but right now it's looking positive. Okay, pound euro. I don't want to spend too much time on these things. I'll start looking at any questions that come in. Pound euro is looking particularly good, I thought. Of course, this is somewhat news inspired. But again, we've got this clear corrective decline here, ABC. We've got a nice clear 5 waves up here, which is impulsive, suggesting the trend is up. Another nice A, B, C. And now we're starting to shoot up. Now, it gives a bit of a hiccup because Portugal seems to resolve some of its problems, but the wave pattern looks positive right now. Ideally, I want to see this fall hold this level here, about 115.5. And a nice spike low would be a good buying opportunity on the pound euro. So I'll now just actually mark any points before I go on to questions we've had so far.
No. You're a specialist on these, John. I don't follow currencies that much.
Okay. And we've got another plumber saying that the graphics are not keeping up. I'm sorry, that's something we can't do anything about, but thank you for letting us know. What is a T-bond? Okay, a T-bond is the US Treasury. It's like the UK gilt. The T-bond, I think, is 30 years, long-term bond, and it's the major bond in the world. The UK gilt is obviously important to the UK, but the Treasury market is a huge market in the States. Slow down, okay. All right, so I've got a few more questions. Wave 1 through 3. It could be a triangle, it's possible. I think it's more. I mean, right now I'd say it's not. Was that what you said? Sorry, I'm sorry, Robin. I'm not really following this. It's rather difficult to keep track without a full question in one go. Right, Ken. I know that IG and CMC have mobile apps. Do you know any others? I don't actually. Do you know, Mark?
Gecko do one.
Oh, do they? Is that recent?
Yeah, Gecko just launched. Yeah, they've just launched one. So yeah, IG, Gecko, CMC. I think they're the main ones. Capital Spreads might introduce one shortly, I would imagine. But certainly the main ones are Gecko and IG.
Okay. Collis Ross Jones has asked which, in our opinion, leads the FTSE or the Dow. I don't believe either leads. I believe there's a global trend which leads everybody. But certainly, as the Dow opens, they look to see how FTSE is doing, and they've got other European markets. And as FTSE opens, they look to see how the Dow is doing. So it can give the impression that one leads the other, and of course Nikkei has an effect too. But in my view, it's all a global trend, and this idea that one leads the other. I mean, certainly, obviously, the Dow is a bigger market, so it probably has a bit more weight than FTSE. But I think it's a global trend that's important these days. Everything is so interlinked that it's almost bound to be the case. Okay. Have you any upside target in mind for the pound euro? Well, I think he's going to take out. Well, it looks like he's going to take out 124. I mean, it's sort of the sky's the limit a bit. It looks like it could be a substantial move. I haven't really got a target in place. I don't tend to use targets. I'd need to go through. It's something. If you email me, I'll deal with in one of my reports because it's difficult to. I don't want to spend too much time going through the charts again because we must move on really. I'm already talking too fast, so I must slow down. Do you think we will see the bond vigilantes after more dollar QE on the T-bond? I think the T-bond is destined to fall quite sharply, probably. I mean, we have got a possible. Okay, we need one more decline, give us a fifth wave decline. Corrective rally could last a few months, and then yes, I think we could well see. I'm not sure about the vigilantes, but I think the bond market may well fall back, but not just yet, probably. Okay, next question. Does Citi's next mobile app? Mark, do you know?
So repeat that question.
Sorry, does City Index offer a mobile application?
I don't know.
I'm sorry, Garnet.
I've never used their application.
Okay, next question. Thanks, John. Okay, that's good. Thanks, my pleasure. Next question. What would be the target of the FTSE after this correction? Well, it depends if it goes up or down, really. I mean, if it goes down, I mean, let's say it is a correction, if it goes down to 5,500, then I'd look for the triangle as the first target. So I think I said about 6,700 something, 6,700, 6,750. That would be the target I'd be looking at. But new highs are not impossible once you get that high. Then that's.
No, I agree with that. I mean, it all depends on this peak at the moment. If we can keep it 6,090, then a fall to at least 5,850, at 5,820 is on the cards, and we'll most likely rise from there. But if we do go on to hit 6,157, or maybe slightly more, then we're going to get a deeper retracement. So we need to see the levels, and then we can calculate where the next wave up will be.
Okay, that finishes that section. So we're now going to go on to tunnel trader questions and other questions. Okay, I've got a few pre-asked questions here, which.